Bitcoin has been down more than 50% from its all-time high in mid-April. Many blame Elon Musk's tweets about Bitcoin's energy consumption or reports about China banning banks from trading crypto. The fear is big that the Bitcoin bubble is bursting. In this video, we focus on the bigger picture and explain if Bitcoin could still be a good investment. Welcome to Crypto Simplified, your place on YouTube to easily understand crypto topics. Why is Bitcoin an intelligent investment? Is it really the modern gold? And what about the risk? Let's break it down together. Here are 5 facts that show us that widespread demand for crypto is just beginning. Big financial institutions are taking it seriously. Many investment banks and funds have been skeptical in the past. Now they are adapting it. Large companies accepting Bitcoin or even holding it on their balance sheet. Few ones started, others are exploring the possibility. Crypto ETFs. Only few countries released them until now, with massive inflows. Many more are planned, like in the United States. Public crypto exchanges. Coinbase is now the first one. Its very successful direct listing will inspire others to follow. Crypto for retirement accounts. Gerber Kawasaki recently became the first wealth management firm helping individuals to hold crypto safely, reporting high demand. All this proves us that this new asset class is here to stay and just getting started. But why should a digital asset like Bitcoin hold any value, making it worth an investment? We hear a lot that Bitcoin is digital gold. Let's look into this. Some key reasons why people invest in gold are true as well for Bitcoin. It serves as a safe haven long-term store of value, as a hedge against inflation and against currency devaluation, for example due to political uncertainty or uncontrolled money printing by central banks. The correlation of Bitcoin to other asset classes is the lowest of all others, even gold, as the study by Ark Invest shows us, and that's exactly what we want when we diversify our portfolio. And in some other aspects, Bitcoin is dramatically better than gold. It is easily divisible in up to 100 million parts called satoshis. The ability to safely store Bitcoin and to transfer it within a few minutes across the globe is not comparable to the efforts and costs needed to do the same with large amounts of gold. But the strongest argument is its scarcity. Every year we add about 3,000 tons of newly mined gold to its current supply, representing an inflation of 1 to 2%. And nobody can exclude that future developments won't enable us to mine even more inside the Earth crust or from meteors. In contrast, Bitcoin scarcity is hard-coded. The supply is capped and the inflation rate decreases to 0 over time. And if supply is capped, demand is the only driver of price. This leads us directly to Bitcoin's remarkable performance of about 200% compounded annual returns, so tripling your investment every year for the last 10 years. Of course, past performance is never a guarantee for future results, but it gives you an idea of Bitcoin's potential. A common counter-argument is that Bitcoin has a huge risk, but what most people actually mean with that is volatility, which in fact is very high, but something very different than real risk. Looking at the facts, even over few-year periods, Bitcoin's value has almost always increased dramatically. To handle big volatility, 3 things are important. Keep a long-term investment horizon. Allocate only a small portion of your portfolio, for example 1 to 5%, and use dollar cost averaging to enter your position. Real risks and issues that do deserve to be taken seriously are regulation, energy consumption, and the theoretical possibility to hack the system. We're going to discuss these in future videos. Thanks for watching, vielen Dank!